We're living in a time where artificial intelligence is rapidly changing the job landscape. From tech to transport, automation is replacing roles faster than ever before. But here's the good news. While jobs may come and go, wealth built through smart investing can last generations. In this video, I'm going to show you how stocks and shares can be your safety net, your second income, and even your main wealth builder, if you start now. Whether you're a complete beginner or someone looking to level up your financial game, this is your master guide to understanding, investing, and thriving in the stock market, especially in 2025 and beyond. So buckle up, hit that like button, and let's dive into the future of financial freedom, before AI replaces your job, not your income. Ultimate Stocks and Shares Master Tutorial for beginners and advanced investors. Understanding the stock market. What are stocks and shares? A stock, also called equity, represents ownership in a company. When you own a stock, you own a part of that company. A share is a single unit of stock. For example, if you buy one share of a company, you are purchasing one part of the company's total stock. Analogy. Think of a pizza shop. If you own a stock in the shop, it's like owning a slice of the pizza. The more shares you buy, the more slices of pizza ownership you have. Why do companies issue shares? Companies issue shares to raise capital, to fund their business activities, expand operations, or pay off debts. In return, shareholders own a portion of the company and may receive dividends or benefit from the increase in the company's stock price. Types of stock markets. 1. Primary market, where companies first issue their stocks to the public through an initial public offering, IPO. 2. Secondary market, where stocks are bought and sold after they are issued, such as on the NSE, National Stock Exchange, or BSE, Bombay Stock Exchange. Difference between stock and share. Stock refers to ownership in one or more companies. Share refers to the ownership of a specific unit of stock in a company. In everyday usage, people tend to use stock and share interchangeably. Part 2. Investing versus trading. Investing, long-term approach. You buy stocks and hold them for a long time to benefit from the company's growth and the stock's appreciation. Methods. Value investing. Buying undervalued stocks, e.g. Warren Buffett's method. Growth investing. Investing in companies with strong potential for future growth, e.g. Peter Lynch's approach. Index investing. Investing in a collection of stocks via index funds, e.g. John Bogle's method. Trading. Short-term approach. Buying and selling stocks quickly to benefit from price fluctuations. Types. Intraday trading. Buying and selling stocks within the same trading day. Swing trading. Holding stocks for a few days to a few weeks to benefit from short-term price movements. Part 3. Key concepts from popular books. The Intelligent Investor, Benjamin Graham. Margin of safety. Always invest with a margin of safety to protect against market downturns. Mr. Market analogy. Don't let market fluctuations drive your decisions. Mr. Market is moody and unpredictable. Defensive versus enterprising investor. A defensive investor seeks stable, low-risk investments, while an enterprising investor looks for opportunities with higher returns but greater risk. One Up on Wall Street, Peter Lynch. Invest in what you know. Lynch advises investing in companies whose products or services you understand. 6 types of stocks. Lynch categorizes stocks into slow growth growers, fasticles, turnarounds, asset plays, and stalwarts. 10-bagger strategy. Look for stocks that can grow tenfold in value. How to make money in stocks. William James strategy. A growth investing strategy focusing on C. Current earnings growth. A. Annual earnings growth. N. New product or management. S. Supply and demand, volume. L. Leader versus laggard. I. Institutional sponsorship. M. Market direction. Key patterns. Focus on stock chart patterns like the cup with handle. The Little Book of Common Sense Investing. Index funds. Bogle advocates investing in low-cost, broad-market index funds instead of individual stocks. Compounding. Time and compounding returns are your best friends in long-term investing. Avoiding costs. Minimize fees and costs for better long-term returns. The Dando Investor. Heads I win, tails I don't lose much. Pabrai's strategy focuses on low-risk, high-reward investments. Cloning strategies. Pabrai advocates for copying the investment strategies of successful investors like Warren Buffett. Stocks to riches. Behavioral traps. Avoid common mistakes made by retail investors, such as panic selling during a market crash. Emotional investing. Make rational decisions based on research, not emotions. Trading in the zone. Mark Douglas said, "Success in trading isn't about having the perfect strategy, but maintaining the right psychological mindset." Handling losses. Losing is part of trading. Managing losses without emotional turmoil is crucial. The psychology of money. Luck and risk. Wealth accumulation is often influenced by factors outside of our control, such as timing and luck. Patience. Wealth creation is more about time and patience than immediate gains. Behavior over knowledge. Successful investing is more about managing emotions than about having expert knowledge. Now Part 4. How to start investing. Step-by-step guide. 1. Open a Demat and trading account. Use platforms like Zerodha, Grow, or Upstocks to open an account. 2. Complete KYC. Fill in the necessary details, such as your Aadhaar, PAN, and bank information. 3. Research stocks. Use tools like financial statements, analyst reports, and market news to research stocks. 4. Start small. Begin with a small investment. Consider mutual funds or ETFs for beginners. 5. Diversify. Don't put all your money into one stock. Diversify across sectors and asset classes. Part 5. Smart Investor Toolkit. Key tips before investing. Research. Understand the company's fundamentals and potential growth. Risk management. Always use stop-loss orders, especially in trading. Be patient. Take a long-term view and avoid emotional decision-making. Stay educated. Follow financial news, books, and market analysis. Keep track. Regularly monitor your investments and make adjustments when necessary. Part 6. Conclusion plus learning resources. Key takeaways. The stock market is a place where you can buy and sell shares of companies. Investing is about buying stocks and holding them long-term to build wealth. Trading is short-term, focused on profiting from market movements. Smart investing involves patience, research, and emotional control. Hash-free learning tools, Zerodha Varsity, free stock market courses, YouTube channels, Phenology, Money Control, Pranjal Camera. Apps, Money Control, Investing.com, Economic Times. Final advice. Investing in stocks requires knowledge, discipline, and patience. Start slow, keep learning, and think long-term. Stay tuned for more interesting videos. Like and subscribe. Thank you.